As we reported in our top story, South African animal foods maker Astral says interim headline earnings per share rose by a fifth, even as revenue dropped by 4%. Total sales stood at 4.3 billion rand as consumer spending remained under pressure, reducing the demand for the company's products. However, earnings were buoyed by the feed division and lower finance costs. Godfrey Mutizwa spoke to CEO Chris Schutte a little earlier.
I think if you recall, just after the festive season, the December normally peak for poultry consumption, we saw not a good festive season and the consumer being under extreme pressure. But since then we've seen a bit of a uptake on poultry consumption, and especially over the last 2 months, slightly firmer demand on poultry. But supply and demand still negatively impacted by imports, and the imports are mainly on the back of the strength of the rand. So a lot of opportunistic imports of poultry into the country, mainly from South America, Brazil, Argentina. So that's a bit of a threat for us. But then on the other side, we've got this huge FIFA event coming up in winter. That is normally a bit of a slowdown period for us, and we expect a bit of a pull from this event, maybe not directly, but indirectly from a bit of hype around our local people.
Sure. You raised several things here, but let's talk about the impact of the strong rand on your business. I mean, it's double-edged sword, isn't it? On the one hand, you get imports coming in because the rand is strong, but on the other side, you're also seeing lower import costs.
That is definitely so. The input cost, obviously, from grains, being corn and soya beans, or we don't talk about corn here, maize in South Africa. We had bumper crops locally. We're expecting 13.5 million ton crop year. We also had all-time record crops in the United States. So not just on the back of the currency, but because of good supply demand balance sheets on corns, we've got quite a positive input outlook for poultry in the future.
How much did that have, and how much of an impact did that have on your costs? What percentages are we talking about here?
If you look at what we've lost in pricing on chickens in this country over the past 6 months, and as you know, the pricing currently at a low level for poultry, that drop in price was completely offset by the lower input cost. So those two balanced one another out almost on a zero-base level.
Let's talk about the competition that you're facing, the imports that you're seeing coming into the country. Now, one story that I've heard, and I don't know whether this is true or not, is that the quality of the poultry that is coming from South America is not good as the local quality. Therefore, surely that should give you a leg up.
Godfrey, we would like to think so, but the Brazilians are excellent producers of poultry, and it's not inferior quality coming into the country. It's maybe inferior cuts of poultry, but it's not that bad, and it's not a direct competition for us. It's a direct competition. It doesn't go into our retail as branded products, but it goes into the institutional markets, and also more into the conventional market.
How much of a threat is it to the local poultry industry?
It is a threat. The Brazilians, excellent producers. They considered to be the best in the world, mainly driven by the lower input costs. They get extreme benefits from better yields from beans and corn that help them produce a cheaper kg of meat, and then also the health status of the birds is much better than our average in South Africa. So they're good producers, and currently with the currency fluctuations, beneficial to them, but also because of the meltdown of the economy, there's a lot of capacity to do deep ocean freighting into South Africa, so that also benefits them. But it is a threat. We've seen the highest import level into this country in the past 3 years happening in March month during 2010, about 27,000 tons of meat coming into this country.
I suppose all very good for the consumer. At the same time, so we've got these imports coming in, and therefore competition is fierce. At the same time, we've got huge supply in terms of the chickens that are being produced for the market. What is that doing to prices?
Well, Godfrey, the prices we've seen during December, January, February of this year is the lowest we've seen in this country over the past 2.5 years. So there's a big benefit for the consumer, and it's an extended Christmas for our local people buying chicken. So hugely beneficial.
But do you see that being extended for the rest of the year, or do you see perhaps pricing power beginning to come back into your hands again?
I think not power, but maybe firming up of the extreme volatile promotional activity where we see this deep cut promotions, maybe just firming up of that levels. I don't see a spike in poultry prices, but I see a slightly better pricing promotional levels.
All signs that we're seeing in the economy are suggesting that we have started to see what may be a sustained recovery. The GDP numbers for the first quarter are not out, but all suggestions are that growth will be stronger there. Are you beginning to see the first signs that perhaps the consumer is beginning to perk up?
I would like to think so. Was it going to be a L shape, a W shape, a V-shaped recovery? It looks like a U-shaped recovery, but I think we've bottomed out. I think our consumer is strong currently, and we're positive about the effects of the World Cup and thereafter.
Are you also positive about the operations in the other countries in Southern Africa? I know the results are talking about very, very disappointing results coming out of Mozambique and Zambia.
Yes, the results out of African countries, meltdown of those economies, Zambia based on the copper price lag, and we're expecting a slower recovery out of Zambia than what we anticipated originally, but I think we've seen the worst of times in both those.